Retained earnings. Now, retained earnings is the accumulated net income or loss since a company's inception. There are adjustments to retained earnings that may include dividends paid to company shareholders and other stock adjustments. However, it's recommended those adjustments are captured through separate GL accounts. We don't want to interfere with the retained earnings balance. One of the reasons for that is the retained earnings balance is a system-generated account that happens to be measured at the historical rate. Now, the balance is dynamically generated by taking the prior year retained earnings balance and adding or subtracting the prior year net income or loss. Let's take a look at an example so that's clearer. So let's assume in the accounting period January 2022, our retained earning balance is $50,982,000. Now that balance will be consistent for the entire fiscal year. In other words, when we run our consolidated balance sheet for December 2022, if that's the same fiscal year, the retained earnings balance should be the same. And note, if for some reason it's not the same, you should double check your GL account configuration. Specifically, double check that your income statement accounts are actually measured at the average rate and not perhaps inadvertently measured at the current rate. So with that balance not changing, we then need to look at the net income or loss for the accounting period. And in this case, we have a loss of around $752,000. When we combine the two, so our 2022 brought forward retained earnings, plus or minus, in this case, our net loss for the year 2022, we have a balance of $50,230,000. That balance is carried forward into fiscal year 2023 as our new retained earning balance. Let's jump into NetSuite and validate that. So on screen, we have our consolidated balance sheet, and we have it for the accounting period December 2022. And we can see here that our retained earnings is the $50,982,000. And we can see that net income for this fiscal year is a net loss of $752,000. When we go ahead and run the consolidated balance sheet for January 2023, what we're going to see is that our retained earnings is now the combination of those two balances. Our prior year retained earnings plus or minus the net income or loss for that prior year.